If you still aren't trading with supply and demand, you need to watch this video. Let's go right into it. So I've talked about supply and demand a few times on this channel, but if you guys still haven't seen the videos or you're still not up to date, this past week of trading, October 15th, provided a few great examples of why supply and demand is superior to every other trading strategy and how you could have been on the right side of the trade at any point during this week. So let me show you a few examples and why the strategy is so powerful. Let's just jump over to the charts. All right, so now we're looking at the Nasdaq 100 on a weekly time frame, and look at what happened here. So here are March 2020 lows. You rallied up from this level. You pretty much went straight up, but along the way you formed a few basic consolidation periods. So like I mentioned in my previous videos, supply and demand are formed off market imbalances. When price goes up rapidly, it forms supply demand zones. It leaves a zone of unfilled orders. Then when price gets back to that zone, all the big banks and institutions are getting their orders filled right there. Or shorts are taking profits in these areas because they know they should expect buyers in these regions. Then you would expect buyers to step into the market and send the market higher. Now, if you were paired on Thursday, CPI day, October 13th, you probably wouldn't have short the market at lows because you got this green box in your chart. And when you see green on your chart, and then at the market open, you just kind of consolidated sideways and sellers didn't really enter the market. Then you saw that massive rally of about 5% in the other direction, making it one of the biggest intraday swings in the Nasdaq history. You fell 5% and rallied up to close up 2% on the day, which is pretty historic. So you guys can say you lived through a historical event. Now, moving forward. So this pattern that formed on the weekly time frame would be considered a rally-based rally pattern. You rallied, you based sideways and rallied out. And there were a few entry opportunities you could have taken down here out of demand on Thursday. And I just want to point out, we had this kilo that formed down here at 10,665. It was just a wick from this candle right here on September 21st, 2020. And this level will come into play on Thursday. Let's zoom into an intraday time frame. So throughout the week, you were kind of bouncing off this 10,800 level. Buyers kept on stepping into the market at this region. So on Thursday, when CPI came out, you immediately fell through this level and kind of noticed the volume down here. It was a pretty big red candle, but then it just kind of slowly died until market opened. Now market opens right here at 6:30. You can kind of already tell that sellers, they weren't really being active in the market, and it just goes back to effort versus result. Sellers clearly weren't putting effort into the market down here, so then buyers were able to take control and send the market up higher. And this goes back to the 10.6 level I mentioned. You kind of broke over this level for a second. You pulled back. Look what happened here. You formed a higher low. This is a bullish market structure, higher highs and higher lows. You formed a higher high, higher low. Then you formed another higher high. You pulled back, retested that level at 10.6. You could have entered off this candle right here. And boom, after you entered off this candle, the market just went vertical. You went from 10.7 straight up to the next kilo we had at 11,058. And that was a pretty solid trade, a 300-point trade on Nasdaq, or QQQ calls or anything in the Nasdaq. The market went vertical on Thursday, so you could have taken trades of anything. And me personally, I did not take advantage of this trade. I was just being patient and waiting for the market into supply zone. And this goes back because I understand the market's in a downtrend. I didn't really trust the upside in the market recently, so I've just been waiting for price to enter supply zones and take my positions up there, rather than trying to force something in the demand zone. I know demand zones have been getting destroyed, and they're not really too trustworthy in these market conditions when the market is dropping lower. So moving forward. So Thursday, you rallied at the demand zone. Great long trade down here if you're prepared this day and you weren't shorting the market down here at lows because you had this green box in your chart. You also had these key levels, in tandem with everything. Then the next trade, which I participated in, was on Friday, October 14th. So we had the supply zone that formed here around 11,200, stemming from going up to 11,275. So in pre-market, the Nasdaq kind of consolidated around 11,058. You're kind of bouncing off this level. Right before market opened up, you rallied in the supply zone. I instantly saw a reaction up here. Sellers stepped in the market, and then as the market opened, you just kind of sold off the entire day back down to 10,700, almost giving up the entire move from Thursday. Now, if we zoom back in the 5-minute time frame, you'll kind of see it more clearly. So the market opened up here around 6:30. You had this big red candle that formed. You already had this supply zone rejection in the pre-market, and then buyers in the following candle try to push price up. Like what happened here. You formed yet again another lower high, a lower high right here. You sold off the majority of the day. You could have looked for a retest off this level at 11,058, look for a break and retest to the downside. You kind of got one, and you sold off another 400 points, giving up majority of the move from Thursday. A lot of people probably saw this big green candle form, and they were probably buying calls up here, not knowing you're about to enter supply zone, and you already got rejected out the supply zone in the pre-market. There was lots of red flags on Friday, indicating that there could be further downside throughout the day. Like I mentioned, rejection out supply, lower high, and then no buyer stepped in throughout the day, and you're about to enter this demand zone that we bounced out of on Thursday. Why is supply and demand so powerful, and why does it work so well? Like I mentioned in the introduction, supply and demand is where big banks and institutions are taking trades and where the orders are getting filled. When you have a rapid price drop, they're leaving lots of unfilled orders, and these are what form these zones. So instead of trying to buy calls in supply zones where big banks and institutions are getting the orders filled, you should try to be on the side of the trade with the people who actually move the market, rather than trying to trade with oscillators like the MACD and RSI, which are lagging indicators and won't tell you about how the market's actually moving. The market's only going to be moved by volume. This is why supply and demand in tandem with volume are such great tools as the primary use of my trading strategy. Without these green and red zones on my chart, I could have been on the wrong side of the trade, buying puts down here, not knowing I'm in a demand zone, not knowing that big banks and institutions are covering their short positions down here, taking profits, buying stock even, trying to rally the market. I could have been buying puts down here, and even at the supply zone, I could have been one of those people that are buying calls up here, not knowing I'm about to enter a supply zone. So there's just lots of reasons why I like supply and demand. It makes it really simple. Supply and demand allows me to be patient and let the trades come to me. They're trying to force something when there really isn't anything active in the market. And supply and demand on the Nasdaq and the S&P 500 work really well. And also when you see the Nasdaq ES coming to supply zone, it works really well because then you can go look at an equity like Tesla and then take short positions when the Nasdaq's in supply zone. So on Friday, for example, October 14th, Tesla came up to 226. This is about the same time the Nasdaq was entering supply or closing below supply. You knew the Nasdaq was in supply. Some people are probably buying calls at this key level and not knowing the Nasdaq was in supply. They bought calls up here. They instantly got stopped out. But people who had supply and demand in their charts that knew the Nasdaq was in supply zone, they bought puts up here, and they were able to ride these puts pretty much the entire way down. It caused the Nasdaq to sell for over 400 points intraday on Friday. And this is how powerful supply and demand zones are. And when you trade with the big banks on your side, it just makes trading a lot more easy, a lot more simple. It's way less stressful than trying to trade against the trend and trying to trade against the people who actually move the market. Now, if this video helped you, or if you learned anything, just drop a like and comment below. And stay tuned for the next video. Thanks for watching.